Hello, gang. We're going to get started here in just a minute. I'm just going to start with a quick sound check. Okay, gang, it is May 8th, and this is Forward Focus. So we're going to take a look at what is going on here today and as we head into next week. So we're just going to kick off here just with an overview of the indices. I'm going to do a little bit of a shorter view today, because we spent extra time on them over the last couple of weeks, and give you guys some chance to dig into some of the other charts here today. So let's begin with the Nasdaq. So you can see we've got a little baby 2T up here right now. So a little 15-second chart. I'm going to start off actually with just a little bit of a tiny lesson, because in League of Traders this week we've been dealing with different strategies. So main strategy that we had forming here on the Nasdaq this morning was the avalanche as we were going into the day. So this basically triggered after we came out with the earnings, not the earnings news, oh my gosh, the unemployment data. So the unemployment data kind of kicked off the start of this. It was already turning over in pre-market. You can see up here, pulled down, and then we were going in, we were just hitting a retest of the previous lows. And then here's the unemployment data. So it kind of sent up that bigger swing. But once we got out to that nice mission move zone, triggered that short here ahead of the open. So it was following through, nice two-wave move coming out of that. And then we've got a two-wave move up and a momentum reversal. 1, 2, 3. So that was another one of the setups today. It was just a retest of this zone. And I shorted this. I was hoping we would get that momentum picking up. But unfortunately, right in here, it started going into a megaphone. So it just went and it could not keep up that momentum. So we ended up seeing this do a little bit of a check mark, little baby phoenix, and take off. In the ES, that was an inverse head and shoulder. So I'll show you guys that one here in a second. So this flip here, it had some increase in momentum that got me out of the short side there. Basically a do or die point. It either should have tried to pick up again to bring it back to this low, or it was more prone to failure. And you could have flipped it. I pointed out the reverse head and shoulders on the ES, but alas, I did not flip it. Not in this case. Kind of busy day here again this morning. Let's see here. So I'm going to go to the larger time frames. We're going to start with the daily chart here. So what we were looking at last Friday was we were coming into the lower end of this trading channel. So the week before, we were looking at upside, and then the likelihood that we would get a bigger correction again, that it would try once more to bring the bears back into play. So we saw that play out last week with the choppiness. It got up to around here, is about a 76.4% retracement zone still compared to this downside move, reacted off of there. But when it hit that first main support level, that's what we call a do or die point. Either it is going to break down at that level, usually by, giving us just a little bit of a pause and then get going, or it's going to hold and stay in the channel. And as you can see, it chose the latter option. We had a little momentum reversal, just like I showed you on the NQ, taking place on the ES right at that low. So that helped drive that move. And I'll show you just a really quick view of what really contributed to that increase in the momentum this week when we flip over to the ES charts. But at this point, it makes me a bit more cautious both ways, because we're kind of dealing with this tilted move up. So it looks a little bit like a momentum reversal, but the distance between the highs is too tight over here for a great momentum reversal. So sometimes even when it holds, it can go and do a retest that can even out the spacing before you get a bigger correction. But at the same time, since it's also pushing up here faster, I'm wondering if we're going to get kind of a tilted 2T again to bring it back up to that level. So originally, we weren't looking for quite as much strength as we're seeing, but we're just having to follow and rely upon what's happening on a week-to-week basis at this point. And it's the shifts on the intraday timeframes that are really determining where we're going right now. So just like this pullback here with more of a bit of a stronger price correction and was able to allow this to go and push up with that third move. So we got 1, 2, and then 3. If this had pulled back and held in here, the odds are that had this broken this lower end zone, we would have at least seen a retest of this level. So a couple weeks ago, I showed you a number of examples of that. So go back and review that, because that same pattern can also happen at additional higher levels and on the intraday charts as well. In fact, we saw a little baby version of this yesterday on the NQ. I'm going to see if I can find the time on it because I shorted it. I think I shorted the NQ. It wasn't the ES. Let me go look at my time and sales. My executions on yesterday, quick. So I want to show you an example of where that did totally turn around. Maybe it was on the ES. I had like 3 markets I was trading yesterday. I've got ES, Gold, and NQ, and I know the pattern was on one of them. Oh, you know what? It was the day before. Aha. Okay, hold on. I'm going to go down to the correct time frame here. And show you this kind of small little, so it's just a small little move. And it was on, let's see, 11 or 1450. Okay. So I'm going to drop down to a smaller time frame here and show you guys this because I want you to see what it was that I was looking at for the potential so that you can see what it looks like when it follows through versus when it doesn't, like what we just saw. Scrolling, scrolling, scrolling. I need some like music here in the background for you guys, right? All right, let's see here. Right here. And so see this here. What you're looking at is you've got 1 move, 2 moves, a little bit of that bigger price correction, just like we saw in the daily time frame. And then it put in the 3rd move. Now in this case, it was actually a little bit steeper than what we saw on the NQ. The NQ on the daily time frame was mostly what we talked about it doing. That's what it ended up doing. But this is the same type of thing. So when this came down into that level here, that zone is where we could have again seen a reaction, just like we saw on the daily time frame. But in this case, it just paused there and then did the pullback into this level. So sometimes you get a reaction off of this level, and then sometimes it'll come all the way down to that lower channel break. It didn't quite hit that here on this one, but that's what you're looking for. Scott gave me some scrolling theme songs. Okay, I'll have to check that out later. So this is more along the lines of what I was originally anticipating that we would see happen a couple of weeks ago. And it gives you an idea of what does it look like when it keeps following through. So if it hadn't had as strong of a reaction off that lower support level, that would have given another short. So let me show you the daily on this as a comparison here. See if I've got another chart here. All right, so see this? I'm going to try to like line these up here. Look at that. And look at how closely it lines up. So the only thing that happened here is that the difference of how it reacted to that lower level. So it's always really cool when you guys see patterns where you can see, hey, you know what? This one did what I was expecting. This one didn't do what I was expecting. And then you can determine which one is the most probable of those. So what we were looking for was, in fact, the most probable. But the odds are still really high either way that it's going to come into that lower channel. Whether it breaks that lower channel depends upon how it hits that lower channel and what happens when it hits that lower channel. So nice comparison study here for you guys. Let's flip on over there to the ES really fast. Like I said, I want to kind of go through these a little bit more quickly. And my bigger time frame expectation here on the overall market is now just to watch these smaller time frames, because there's going to be more of that shift in possibility. So I don't have as strong of odds right now on the larger time frames. We call this a zone of pain. It's basically a really choppy zone where the momentum hasn't shifted enough to give us a really strong idea of where it's going to go, because this downside move was still pretty strong. So compared to the upside move, you had that stronger momentum. So it's generally higher risk as a buy, except for, let me show you what happened in here. And we talked about this extensively in League of Traders throughout this week. From the very beginning of where this was triggering a couple of days ago, I'm going to go up to the 20,000 tick chart here. And I'm also going to show this to you on, let's see, probably about a 3,000 would be good. Let me check the 1,000. I think that might be a little too small. I need to go back to the third. Oh, yeah, we can see it here on the 1,000 really well. So that low where it hit that channel was right here. Notice there's also a 76.4% retracement of that previous upside move. So here we get a momentum reversal, the exact same pattern that I was showing you guys on the Nasdaq earlier that led to that pullback around, what's it, about 10:30ish or so. I don't have that time frame up here. Let's see. I guess 10:45, 10:40. So it's the same pattern, just flipped over. So that kicked it off, but then look at what happened here on the 20,000 tick chart. So when you have a deep V, if you have a Phoenix and then another shorter time correction too, and they're both like right in a row like that, when that breaks, you're more likely to get it to surge. So that's exactly what we saw happening here. And that's what we talk about when I say, hey, it's up to what's happening on the smaller time frames now at this point to determine whether this is going to give us a good impulse move now on a bigger time frame. So what happened down here has allowed this to react more strongly off of that level. All right, so daily charts right now, kind of in a either or zone. So we've had some pretty good directions to go off of recently, but this time stick to what's going on some of the intraday time frames and look at the smaller time frames. This is usually a much higher risk zone for swing traders. So if you're looking like to enter a new position as a swing trade, this is going to be a higher risk zone to do it. Usually when I'm trading stocks in a market like this, and I see this happening in the overall market, I'm flipping to trading things that are like earnings moves. So like Rue was mentioning earlier this week, he's been trading BYND. So let's flip on over to that one. By the way, just a little bit of a momentum reversal on the ES here, right off this high too. So here's BYND. Move that. Got some wonky time extension in there. It might have been on an intraday chart. But let's see here. Hold on one second. So I'm going to put this back up there so you can see the retracement levels. So this originally came in and it had, similar type of thing going on that the overall market was doing a couple of weeks ago, where it kind of started off the low, picked up, hit the 76.4%, two-wave pullback, and then we had a runaway gap a couple of days ago on earnings. So the day of that gap, things just basically kind of kept going from that point. And the question was, okay, after that point, how can you get in to look for continuation moves? So I'm going to pull up the intraday charts on this. And what we're looking at here is, let me remove this. That was a little baby head and shoulders zone in there. But what you're looking at is that you want to watch for how these time corrections take place. So like after an early morning move like this, we had the three waves, with that last wave just kind of being a little bit weaker, just like we saw on the daily time frame on the Nasdaq. Two-wave pullback in here, channel break, check mark. So these are what we would call, kind of core smaller setups. And then you got a two-wave move up. So another bigger correction, another move up. So once you've got those two corrections in a row, you're more likely to get a longer correction. Then you get another check mark, another move up. So those were some of the early morning continuation type of plays that you can look for. And it helps at times to watch where your tail's at. So if you have a lot more tails on the downside in a correction, that's going to usually give you a stronger upside move too, as well as if volume is declining in there. This is a tick chart, so you wouldn't want to follow volume on that one. But if you were looking at a time frame chart and looking at the volume, you would want to see volume dropping during that pullback, during that correction. This one's a little iffier over here because see how it pulls up to that high again? So even though it's testing the high for the third time, the momentum just isn't there. It's slower. So it flushes, then tries to go, but of course you're going into the closing bell at that point. So you've got a higher risk with the end of the day situation. Generally speaking, you would have declining volume in here too, but when you come right into the end of the day, when you're watching for breakouts, sometimes what you will notice is that volume goes flat. Well, if it's the end of the day, that's the equivalent of if volume is declining. So here's another check mark type of move, basically with your cup with handle into today. So that would have been another opportunity, but there wasn't much for a smaller time frame setup on this. It's just the bigger channel break, which means you can end up with a pretty wide stop on something like that. So at this point, I wouldn't really look for much more upside on this on the daily time frame. I think there's a little bit of room to possibly push, but your risk is going to be higher. So what we're dealing with is that on this daily time frame now, I mentioned this, I think it was earlier this week. It might have been last Friday, but we are getting this potential for this to go into a megaphone. So there is still some room that this can creep up. It has this over here as a bit of a magnet as well. But since we're so close to it, you would only want to stick to like intraday scalps at this point is all I would be looking for, because the risk of getting some intraday flushes that could be pretty wicked on an intraday scale is going to increase now from this time forward as we try to push up a little bit more. You also are going to start to run into potential for trap gaps as we head up into that zone too. So if you look for things that you're going to be holding overnight, it might look really strong into the close and then get a really big gap against you in the morning. So you're getting into that zone of that potential here. All right, some of the other stuff you guys have questions on. GM. So General Motors, obviously big one in the news lately. What we're seeing on this is that it's trying to do, here's the two-wave up, here's the two-wave correction. So it's trying to go into a little bit of a shallow phoenix at this point. The correction is about twice as long as the previous correction. So how I would count this as far as wave count goes is that this is wave one on the upside. So now there's possibility for wave two coming out of this. Again, the momentum here back to the lower end of the channel though, pretty fast. Let me show you this a little bit wider. So what's happening is that it's testing the upper end of that channel at a faster pace here. So we've got this kind of tighter distance between these highs. It's harder to sustain a breakout when that happens, so it's easier for it to pull back one more time, just like we saw earlier on Beyond when it was going into that closing breakout. It was coming back up, it pulled back, and then it went, but it didn't totally go. It got stuck at like right there, and then that was the closing bell and pulled back the next morning. So that's a risk that we have because of the way this range is forming at this point. So if it pulled back into here and then broke that channel to the upside, that could be worth looking at as an add-on zone or buy zone for a swing trade. I would give it maybe 3 days to do that. That would be what I would be looking for on that. Yeah, I mean, I would call it a phoenix. So phoenix is essentially a type of flag. So PENN. I'm gonna add a monthly on here or weekly. We'll start with the weekly here. Okay, so we're back into that zone of resistance, but with the momentum, we often see things that can push up through there again and still have a pretty good recovery. So let's go back to the daily. So what we could be seeing on the daily is something along the lines of what happened on the ES earlier this week, where it went into those two corrections and then was able to gain momentum, but I would like to see it go out to about here. And if that broke, that would most likely trigger a surge. So if this treated this as wave one and this as wave two for time correction, that would be a good trigger to have that go and give a more rapid continuation on the upside at that point. But I would really want to see it hold in the range first. So if it tries to do slightly higher highs, that would kind of be a little bit of a turn off. Sometimes this will go into a megaphone formation here and then go. In general, I'm not as big of a fan as a megaphone as a second correction as a continuation, but it definitely happens. So how do I pick the time and correction? Good question. So what I'm doing is I'm looking at here to here, and this is a two-wave correction. So we call this a check mark correction because it looks like a nice little check mark. Think of it like your, oh dear, word block. Square root sign. There we go. Think of it like a square root sign, is that's what you're looking at. So that's what we call a check mark. And it's basically a phoenix within a bigger phoenix. And then since this stopped here and started to go into a range again, I'm looking at this as the next chunk of correction. So here is first time frame correction, here's second time frame correction. Let me show you this compared to the ES the other day, and then you'll see it a little better. So I closed my ES chart, I sure did. Okay, we'll change the NQ over to the ES. I had Tesla up earlier too. Tesla was soaring earlier. I might still have that chart open here. Nope, I closed it. We'll pull that one up too though. So ES, I'm going to use up the 8,000 here. You can kind of see here's one example on the NQ. This is the NQ. So here's the check mark. See that? And then see how that went into that range. That's about the same amount of time. It wasn't as good as time development as it was on the ES. But where it starts to go here is about the same amount. So see how it's check mark and then megaphone. See if that's going to load here fast enough for us. It's taking its time. All right. You win. I am going to just pull it up in the Telegram channel instead, because I can just scroll up to there. So here's another example. See here, this is an example where it failed. So see, we had the two-time correction here, and this is when I was short, up here and here. And so what I needed to see was that picking up and continuing immediately here. So when it couldn't, that got me out of the rest of the entire trade. So what we need to see is, again, that same time correction. And so here's an example of where the megaphone as the second correction did not allow it to keep going. Whereas on the Nasdaq the other day, it still managed to do it. Let's fly through here. I'm going to go back to some of those time corrections. Here. So here's what we were looking at on the ES. Now look at that compared to PENN there. So see that, and then that would be similar. So you can see kind of that check mark there. It's not quite as defined as on PENN, but it managed to pull up the same level. So we're approximately this zone here on PENN. You guys see that? Good. All right, let's look at some of these other ones now. We've got, I'm just going to scroll all the way back up and get some of them that you asked first. Yes, that Tesla. So here, Tesla did the same thing that we were expecting in the overall market, which was that it had the first move, second move, third. So in this case, the third was an exhaustion gap and really big pullback. It pulled back more than just the channel. It pulled back into the previous low. So now what we're looking at is this is just a zone of pain, which is basically meaning that it is a level that the next move is determined solely based upon what is happening on the intraday timeframes, on the smaller timeframes, and that it can change with just a single shift in momentum intraday. So right now what we're seeing is this is trying to do a little bit of a second wave up for like a 1, 2, 3. So on the intraday chart here, what we've got is a really rapid move up, good 2-wave in there, 2-wave correction. That's a check mark. So it can go and do potentially another 2-wave on the continuation. But it's not fully guaranteed that because of the trend placement on that bigger time frame is really iffy. So this didn't have an extra flush here to give us a good megaphone. If it had had another flush to a slightly lower low here, the odds of this doing a 2-wave measured move up increases dramatically. So even though it's still held and pulled up a really good level, it's not as strong as if it had that extra shift down here. So this could start to chop and just struggle with trying to put in that secondary move. Can you identify a check mark? What's a check mark look like? So specifically, what you are looking at is a move that has a pullback, a bounce, and a base. So it will look like that square root sign. So you'll have the V and then a base. So that's what we're referring to as a check mark, but it's just a type of phoenix that's usually within a bigger phoenix or a bigger 1, 2, 3 continuation or a bigger bull flag or consolidation. So it's just the last portion of it. And the thing with the check mark is that when this breaks higher, if the distance between these highs is measured, it can do a really strong breakout. But if this breaks higher at a faster rate, which you can see it did here, then this move and this move become the key target level. And at that point, momentum can shift again. And that's why we've got that potential for this to play around here now, because we don't have as high a probability given the fact that it broke faster. So it can do either or, and the odds of it going for that bigger 100% move have dropped because of the way the check mark formed and the larger time frame. It's still a possibility, it's just less of a possibility. So in here, you want to stick more to intraday setups, and you can build into them as long as momentum holds, but be aware that failure rate on a bigger time frame setup is going to be higher. Can still hit the target levels, do really well on a smaller time frame setup, but then struggle to get to bigger time frame levels. Yeah, I'm not sure on looking up that one, Alan. Is that like a money market or something? Or not a money market, a fund. I'm kind of tripping on words today, guys. Sorry about that. I blame it on being sleep deprived this week. I know. I tried to sleep. Nicole is scolding me. So here's what we're looking at on our the AUD NZD coming off of the low. I'm doing a lot of stuff that we talked about in League this week as review. So one of the things we were talking about was the megaphone, right? So now when you've got a megaphone, if you can, your first extension is going to be taking that main move here and then going to last high and down. And that's going to give you your main target level. And you can also then look at the second level down here. This was also my tip of the week. It's in the group on Facebook. Let's see here. So at this point, we've got 1, 2, and then it's shifting again. So this shift tells me you're going to be in, again, that zone of pain area. This can go and do another 2T here to kind of shift it, and that can help bring things down. I think you're at a good spot where we could start to see flushes on the downside, but I would really like to have another wave up before I would look for a flush. Let's look at this intraday. And go to bit, add some more days on here. Oh, it's not going back for some reason. That is weird. I didn't restart my system here before we got started, so that's probably why. But let's see here. I'll just look at the 15-minute instead. So a little bit of kind of momentum reversal-esque type of action in here, but I don't really see anything that is going to force this. I don't know why those are looking so different. Let's go up to 60. Yeah, the intraday chart doesn't look as likely to go and do another move up because you can see that there's 2 waves here. 1, 2 already, and a little bit bigger of a price correction so far. So this might just do it with like a head and shoulders to get it to pull back more at this point. And it wouldn't even necessarily need a shoulder. It could just do it with like a 1, 2, 3 and go even faster like that too. So something on like a smaller time frame for a continuation move could even bring it down. Just be aware that you've got the potential for that shoulder to play out. So if it doesn't go at more of like a kneecap, which would be closer to like these here, then it can put in that shoulder. And you would want to see volume dropping in that shoulder. So right now, volume isn't really that weak here. It was kind of lightening up as it was going higher, which is good as far as the bears are concerned, but we don't really have enough confirmation to totally get that going here yet. So on the 15-minute, for it to try to do that, what we would need to see is some sort of bearish pattern in here, like a two-wave like that. It's a little trickier because you can see there was a shift in momentum on the 15-minute right here. So this is similar to our daily chart on the Nasdaq where we had the wave, the first wave, the bigger wave, and then the third wave. So it has a better chance of doing a little bit of a bigger correction, which means that I would be favoring more of the shoulder versus a faster continuation. Dawn is also going to beat me if I don't get more sleep. You guys. Ganging up on me, jeepers. Let's see. Look at this, guys. They're so violent. There's your proof. Um, what else do you guys want me to take a look at here? ABB. Okay. Yeah, so ABB is that same type of thing. You know, you've got the really huge extreme move, the pop down, and then the push up. So it's a lot like PENN as far as like what can happen. We just can't see that consolidation attempt here quite as easily. But if I kind of widen this up, you can see that little check markish move in here. So again, if that can go out that same amount of time again, that would allow it to have that stronger breakout. So really very similar. CIBC. I am not familiar with that one, and it is not loading. Is it RBC? Is that what you meant? Weekly. The same really strong recovery in here. So what we had is this went and it did the break, but then it came right back up into the channel with extreme momentum. So a lot of times what that does is it pulls it up higher again. So even when it tries to pull back again, you'll usually still see more upside first. So that's kind of going along the lines of what we were seeing on ABB and PENN. Yeah, I think your ATH wouldn't pull up because it's on Toronto. But I can, let's see if I can grab it on a different platform here. Oh dear, you guys. We have a murder taking place over here. Hold on one second. My cat brought in a lizard. Yep, lizard is safe. He is now being released back into the wild. I have an open courtyard off my office, so I have that open. So it's not like the cats are like running around in the whole wild, but occasionally the critters slip in there. We had doves flying through my office a couple weeks ago. It gets a little wild. Um, let's see here. We were trying to look at Athabasca Oil Corp. So much excitement. I'm not really seeing too much on that. That's exciting. It's just looking pretty flat. Just going back further, it looks like its prices are just kind of declining on that one. I haven't pulled up any like regular main charts on it. I'm just looking at what Yahoo has up. Let's see if I can get this to come over here for you guys. So you can see we're just kind of slowly declining here. And news type of things can kind of pop these up. So it's easy for them to kind of flip around at times. But right now, I'm not seeing enough for like a pattern really to change it. So you can see there's a little bit of a pop here. It's kind of basing again. So that can allow this to pop up. And it would be the third test of highs too, 1, 2, 3. So we might get a bit of a pop, but I don't know as far as like longer term right now on this. It's a good level it could shift. You can kind of see there's 3 lows here. I know this is a weird kind of small chart, but there's 1 low here, there's 2 lows here, there's 3, and then it kind of shifts here. So that could mean that this is a phoenix that we've got going on right now. So it could give us a little bit of a pop there as a result of that. Wish I had a better chart up for you guys, but I don't know how long it would take me to grab one. So at least you can see that there. All right. On TWLO. Oh my. So this is kind of that same type of thing that we were talking about, you guys, where you get that one little correction and then the secondary correction, and then it just kind of can take off. And it's often a component of an extreme move one way, like that breaks a uptrend that can be in a range, and then it pops into that range really strongly. It'll have the 1 correction, the 2 corrections, and then that momentum can pick up. So the concept that we were talking about on the ES on just that, what was it, the 3000 tick chart? It's the same idea playing out here. It's just we didn't have like the check mark pattern here and then the megaphone here. It just kind of went with a price correction, then a time correction. And that's the best sequence for a strong breakout. If you get the price correction first and then a time correction second, then that's going to usually be a more guaranteed breakout than if it's reversed. But then if you got like a time correction first and then price correction, there's a bigger risk that it won't pick up. So at this point though, again, you're back to just playing intraday stuff. Since this is totally new highs, there's not really other impulse waves we can really compare this to. It's harder to determine how far this is going to go. Oftentimes, what I will look for is I will look for, okay, do we have like an angle here? Then look at where that angle hits on the same side, on the upside. That can slow momentum. Typically, if I see this on a chart though, where it shoots like this, what will happen is it will keep creeping up. It will just start to have more back and forth moves. So you might even get like a 2T, pulls back, comes back up, pulls back, goes up like that, and then you get the bigger correction. So that is very typical of what we would see more at like a level like this. And in fact, I was talking with Karan earlier today, and it was dealing with a megaphone, and it kind of did that same type of thing there. So let me show you that to give you something to compare it to before we wrap up here. So it's on the ES. What time frame it was on? Right in here. So this is 1,000 tick, 11 o'clock. Let me go down to a smaller time frame. 500 is probably good enough. So see this extreme move here? Pop like that? That's a lot like what we just saw. So then this is pretty common. So you can see that we get like a flush here, you get like a flush here. And in this case, it continued a little bit more, but it still is chopping. So here was the momentum reversal type of zone I mentioned earlier in class. But yeah, that's a good thing to kind of use as a comparison type of situation, because those big pops like that, they don't usually flip back around too easily. They'll usually try to keep creeping higher, especially when they start slow like this, then pop, then you'll usually see that creeping afterwards too. Let's see. CM. That was a really nice avalanche. Daily. We've got that momentum shift there. We don't really have an easy two-way base potential here. It's almost a little bit more head and shoulders-ish. See how this goes up high and then it tries to continue, but it's shorter? That usually then has an even harder time getting going. So even if it does try a breakout higher, it's usually stunted and it can flip around more easily. So I'd be concerned about this trying to go and have some rapid sell-offs. So see, here's the kind of continuation here, and it's basically at a do or die point because you've got the measured move here on the 60-minute. So if this is going to try to gain speed, it needs to go here. Otherwise, it's going to go into a longer congestion. And in this case, if it goes out that same amount of time and tries again, so this would be the first correction, this would be the second correction, you don't have that big extra flush like we did in the overall market to try to drive that as easily. So more hesitant on this on the bullish side. I think it's possible intraday, but it really has to pick up. And the risk is that it could flush again fast. Because so far, even if we look at this momentum so far on the upside, we transect that right here. That's what we're looking at as current momentum. So compare that to the downside here. Overall, it's slower. So that opens up the door for some of those flushes more easily than we would see at other times. All right, you guys. Well, thank you for joining me here today. And I'm glad we got through a lot of stuff that I don't even usually look at here. So good charts. And we're going to wrap things up. And They released the lizard back into the wash area, so he should be safe and sound now. It was very smart of him to play dead. The cat's just standing over him, howling at her excitement at catching him. Like, oh no. She is tiny, guys. She is like 6 pounds, but she is vicious. She will even growl at the mailman. She's a huntress and guard cat. She's also super soggy Scott, so she's not really that dangerous. All right, you guys. Thank you again for joining me, and I will see you back here on Monday for League of Traders, Mentor Monday, or Friday for those of you tuning in for Forward Focus.